being co-chaired by 4 co-chairs from different countries, including Mr. Sanjeev Bajaj from India, immediate past president of CII. Today, we have the good fortune of hearing the vision of these two eminent individuals at the inaugural session. Both are leaders in inclusion in their respective fields, with well-being of the people very close to their heart. Also joining on the dais is Mr. Prateek Jain, Regional Managing Partner, PwC. PwC is the knowledge partner for B20 Task Force, and today he would share with us some insights of discussion underway at the multilateral level. After the inaugural session, we would have an interesting and insightful discussion on the following themes: the role of bricks and clicks, bridging the credit gap, financial resilience and financial literacy, the road to inclusive growth, data and data analytics for inclusive finance, and digital financial inclusion learnings from India and global breakthrough.
Dinesh Khara, Chairman, State Bank of India, guests on the dais, friends from the media, ladies and gentlemen. Very warm welcome to all of you to CII's B20 Financial Inclusion and Fintech Summit. Now, financial inclusion is something which every country has been working on for decades. But it's really since 2010 that we have started seeing commitments been made by multiple nations towards financial inclusion. And if you look at in the 10-year period between 2011 and 2021, we have seen a growth of 50% in bankable population globally. By 2021, it has reached nearly 74% of the global population, including 71% of those from developing countries. We must, after all, remember that no country can achieve progress unless its entire population prospers. Our own government has also made significant efforts over the years to promote financial inclusion, both for economic development and for empowerment. There are many schemes, whether it is the Pradhan Mantri Jan Dhan Yojana scheme for adding bank accounts, or it is schemes like the Pradhan Mantri Suraksha Bima Yojana scheme that provides a cover for accidental death or disability, or the Atal Pension Yojana to provide again pension cover to subscribing bank account holders, and many others which have taken the charge. I would like to mention that technology is increasingly playing a vital role in improving both efficiency as well as effectiveness. To each one of us, we have seen in the last few years, especially through the pandemic, how technology in financial services towards inclusion is making our daily lives better. Today, if you're buying something, you're ordering something, you're paying something, for so many of us, if not for everybody over here, it is digital. 10 years ago, none of this existed. The same is true for businesses. A number of measures taken has again significantly improved the ease of doing business. But while technology is paving the way for a globally inclusive society, there is still a need for promoting a widely accessible, secure, interoperable, and a responsible public digital infrastructure ecosystem for financial inclusion. We should, as countries or people or businesses, not make money or not make profit for providing the basic infrastructure. We should make money, if at all, by providing services on that. Supplementing the same, the fintech industry has emerged as a key driver of financial inclusion because of their capabilities in digitizing supply chains, in providing that last mile connectivity, and in offering both financial and associated services at affordable costs. It is also redefined, as we know, the way payments have been made and financial services are getting consumed, whether it's insurance, whether it is banking services, stockbroking, or others. With India being a home to 500 million internet subscribers that increasingly have access to cheap, good quality smartphones, low cost, extensive data, and the presence of secure online transactions, there is no reason why we should not be doing that much more.
This is also a subject which has not really gathered much of momentum in the past, but of course in the last about a decade or so, there is quite a lot of emphasis on this subject. And thanks to, of course, the initiative which was taken by the Government of India in terms of promoting the Jan Dhan, which is the basic infrastructure for extending the financial inclusion. To my mind, financial inclusion is something which holds the basic foundation for the socio-economic empowerment of the people and also ensuring their holistic growth of the nation. Government of India and various regulators have come together for taking a lead in this direction, and the launch of the initiative by the Prime Minister in the name of Prime Minister Jan Dhan Yojana in the year 2014 actually aimed at offering the basic banking services to every citizen with a very clear focus on the unbanked population. This has actually been a game changer, and it has helped in offering an affordable and easy ownership of the banking account to a significant population of the country, which is living in semi-urban and the rural India. More than 49 crore accounts have been opened under this particular scheme, and it has got an outstanding balance of almost 2 trillion Indian rupees. If you really look at it, this 2 trillion is something which is the channelization of savings of a very large population of the country. It should not be seen only in terms of number, it should be actually seen in terms of its import. The import is very clear that the people have been now encouraged to save, and that savings are eventually being put to good use for the development of the economy. The ownership of these accounts also helped in ensuring that in the most difficult time of pandemic, when people were in need of money, the money could be remitted almost in no time. It is all because of this infrastructure which got created. And there are some data points which are available in terms of showcasing how much leakage it has avoided in terms of the money which used to get originated for various social schemes and eventually what used to reach to the ultimate beneficiary. So to that extent, this innovation has really proved itself to be a game changer for an economy like India. Merely keeping an account is perhaps not of much of interest for the account holder also. So now, riding on this particular initiative, the Prime Minister Jan Dhan Jeevan Bima and Prime Minister Suraksha Bima Yojana, they all also got introduced, and it helped in ensuring the social infrastructure in terms of the security for such people that has been brought in. And even APY, which is essentially nothing but the pension scheme for the unorganized sector, it has led to creating the safety net for a very large population. As I mentioned, that about 49 crores accounts have already been opened. And if you really look at it, on an average, a household having 3 members, so practically all the households of the economy have got covered up through this particular scheme. And I think to that extent, in last about a decade or so, the kind of investment which has been done in this particular space is going to yield results in the days to come. So truly speaking, the integration of the financial inclusion with the social protection measures have also resulted into a significant financial discipline. It has also strengthened the financial resilience across a very significant population of this country. Massive strides have been made by government and the regulators in building the digital public infrastructure, with India Stack at the center stage, coupled with the JAM Trinity. The Unified Payment Interface UPI account aggregator framework for digital credit, ONDC for promoting e-commerce, and CBDC, central bank digital currency, are some of the significant transformation initiatives taken in the financial sector in last couple of years. UPI transactions are on the surge, and is quite evident from the fact that the platform recorded 9 billion transactions in the month of May 23. What is even more fascinating is to see that in the Indian parlance, it is the increasing use of UPI by almost everyone, right from the vegetable hawkers to the small shop owners, rickshaw pullers, and the Gen Z. So I think this has really made the payment system a very, very efficient system. And more so, it has to be seen in the context that overall across the globe, the payment system invariably involves a cost of almost about 2%. As compared to that, the UPI system, which is almost available free of cost, is also bringing in huge efficiencies in the payment mechanism and also making life easier for many. And of course, UPI has gone global. It is no more restricted to India. It is now transcending geographies. We have already entered into partnership with Singapore, UAE, and also Australia, Canada, Hong Kong, Oman, Qatar, Saudi Arabia. These are some of the other destinations where we are expecting UPI to move, and very recently, even in France also, a similar initiative has been taken. So eventually, it is going to be the most important settlement mechanism across the globe, and it will even make the international remittances even cheaper. Indian government is aiming to bring all the G20 countries on board to enable the international UPI payments, which I'm sure is going to be a remarkable step and will also probably lead to the integration of the G20 as a group. Another significant development in the financial services industry has been an increasing use of technology. The rise of new age fintechs has been an important conduit in providing financial services across the length and the breadth of the country. They are redefining the way in which various financial transactions are carried out across the broad range of financial services, lending, payment, insurance, investments, etc. Fintechs have got a unique capability in terms of addressing a particular problem and offering a solution which is scalable too. So to that extent, they collaborate with legacy institutions and also bring in the convenience and the efficiency for the benefit of the users. The new age companies have been leveraging innovative technologies, artificial intelligence, machine learning, blockchain, data analytics, in assessing the credit worthiness of the borrowers. Because when we created Jan Dhan accounts and the JAM Trinity, which enabled in opening so many accounts, riding on that was the social security benefits Riding on that was the Jandhan, Jeevan Bima, Jeevan Suraksha and APY. Unless and until we create a mechanism which enables all these account holders to avail credit, perhaps it may not really work well. So with that in mind, with the help of analytics, with the help of the information which is available in the ecosystem, and with the help of surrogates, the fintechs are in a position to offer various solutions to the lending institutions, and which actually brings credibility in the lending models and ensures that the quality of the lending improves significantly. Now, of course, the times are changing. The word disruption is replaced by transformation and innovation, and competition is replaced by the partnership and collaborations. So I think in terms of physical infrastructure, there has been an exponential growth in the number of bank branches, ATMs, the business correspondents. So which actually means that the footprints of the financial system has got really strong across the geography. More than 1.6 lakh odd bank branches across the country, more than 2 lakh ATMs across the country, and almost 32 lakh banking correspondents across the country is a reflection of the kind of footprints which have got developed in this economy. All these measures have played an important role in bringing more and more people under the ambit of the formal financial ecosystem. So it has led to the formalization of the economy, and also in many respects the financialization of the economy too. This is also evident from the fact that the RBI Financial Inclusion Index, which includes ease of access, availability and financial services, uses, consumer protection and financial literacy. These are some of the features which are captured in the RBI Financial Inclusion Index. It has made rapid progress from 43.4 for the period ending March 17 to 53.9 in the year 21. I would like to conclude my address by saying that the journey of financial inclusion and inclusive growth is ever evolving. It is marked by both challenges and opportunities. It is therefore very important that we keep on innovating. We continue to create financial awareness amongst the masses through public-private partnership, as we have seen in the last decade or so. Address concerns around the data security, because the more we go digital, more these risks becomes evident on the surface. And also, with so much of dependence on data, we have to be very mindful about the data privacy also. We need to collaborate or build partnership to leverage the changing demographics in India and also in the rest of the world. I am sure the kind of initiatives which have been taken in the past has given us the confidence that we can continue to evolve and continue to further strengthen in this particular space. And I'm sure with the help of fintechs, this is going to be the most interesting space to really work in. With this, I wish all of you the very best in this event, and I'm sure there would be very meaningful deliberations which will take place during the course of the day, and which will actually give some thought for further improving this particular space. Thank you very much. All the very best.
And also outlining how India has become a shining example for the world in this space, with the latest being the signing of the sharing agreement between India and France on the late visit of the Prime Minister recently, for sharing the expertise of India on the digital financial infrastructure. With this, may we request Mr. Khara and Mr. Bajaj to release a compendium created by us for the B20 on the financial inclusion, which is a set of edited articles on the same from India and abroad. Thank you. It's available. It's going.
Yes, so this is a task force. There is a lot of deliberations which have happened over the last 6 months. More than 200 suggestions which have been received from over 100 participants who are members of the task force. These are the objectives of the task force. So I'll not sort of read it out, but outcome of this task force is to recommend policy actions which are definitive and which are relevant, practical, and futuristic. We all know the chair and co-chair, and we have the sort of privilege of having the chair and one of the co-chairs on the dais with us. As I said, more than 200 suggestions have been received. There are some use cases. Mr. Khaya did talk about UPI, ONDC, etc. Of course, India is a shining example of many of these initiatives. So we have talked about that as part of the task force. And a lot of pride because the financial inclusion was 50.6% in 2011 is around 74% now. But at the same time, we have 1.5 billion people in the world who do not have access to financial institutions. And this data is quite startling. Of course, we have now hope because 63% people have access to internet and 84% have access to mobile phones. And of course, the share of smartphones are growing significantly. So these are some of the data points that we have taken into account as a base for our deliberations in the task force. Now, while the details of the task force and it's still work in progress in terms of the recommendations, but till now, whatever work the task force has done, these are the buckets in which we are trying to sort of put our suggestions and recommendations. The first is on ecosystem and enablers, including things like how do we get private sector to get involved more in financial inclusions, the digital public infrastructure, and so on. What are the products and solutions that we can have and for this purpose, and also what are the legal and regulatory framework which is required as we proceed in this journey. There's also a recommendation on the discussions about setting up a B20 secretariat for sustaining the recommendations and more importantly, having there's some kind of financial inclusion assessment framework. Idea is to see what work has already been done and build on that, and basically not starting something fresh. So with this, thanks a lot. Thank you again.
Before we talk about the next steps, let's just, for the sake of context setting, talk about where we currently stand. If I were to take a look at the RBI's Financial Inclusion Index, which really captures the extent of financial inclusion across India, we are of course today talking about B20 and the challenges of financial inclusion in the context of the global economy. But let's for a minute talk specifically about India. Using 2021 as the base year, the RBI Financial Inclusion Index says that India's overall score is improved from 53.9 in 2021 to 56.4 in 2022. Now, what is the roadmap that the RBI has laid out for financial inclusion as part of the National Strategy for Financial Inclusion, which really runs till 2024, so we've got another 12 months to go. It talks about providing banking access to every village within 5 kilometers of radius. That milestone has been achieved fully in 26 states and 7 union territories. That is as of the 31st of March 2023. There are other parameters that the RBI has listed out in terms of how to improve our financial inclusion score, as well as how to improve outreach to the underserved and the unbanked. To talk more about the road ahead, we've got here with us the chairman of the SBI, Mr. Sanjeev Bajaj, and India representing the foreign and private sector banks. Gentlemen, appreciate you joining us. Mr. Khara, let me start by talking to you. As I pointed out at the start, significant progress has already been made as far as financial inclusion is concerned across a whole host of metrics and a whole host of parameters. But if I were to ask you about the road ahead and specifically talk about the progress PMJDY accounts are concerned. Total accounts that we've opened are about 49.42 crore as of today. Of this, rural semi-urban account for about 33 crore, urban about 17 odd crores today. But the challenge is not that we have opened these accounts, but a lot of these accounts are low balance accounts, a lot of these accounts are dormant accounts as well. How do you see the progress on this front, and what do you believe the road ahead needs to be?
Well, very well said. This initiative got started in the year 2014, and from there we have come to a stage where today we have got more than 49 crore such accounts. As I mentioned in my address also, almost 1/3 of the population is covered. So normally if we take a family size of 3, so all the families are covered. But this is where it is statistics. The very purpose of these accounts, one of course is to ensure that the payment system should be frictionless. That I think it has really helped us in achieving. The second was channelization of the financial savings. That also, if we look at it, these 49 crore accounts have got almost 2 trillion balance in these accounts. So, on an average, about 3,000, little more than 3,000 rupees is the average balance in these accounts. I think the balance in these accounts will be a function of as the per capita income grows. On that particular piece, one of the, apart from ensuring that the accounts should have balance, we have, it has been ensured that these accounts should also have other financial services.
Right.
That is the life insurance and the personal accident insurance, and also the annuity which is APY. So this is something which has already been incorporated. Now the next piece is that their ability to raise credit. And for making credit available for these accounts, very important component is the lender's confidence in their ability to repay. With the help of analytics, perhaps we can create models. With the help of surrogates, we can figure out the repayment habits. And that is something which is going to be the next initiative, next big initiative. Already some small amount, 5,000 rupees or so, that kind of credit is, these accounts are getting linked for the credit linking also. But eventually, in order to really encourage each one of the account holder to engage in economic activity and get supported for that economic activity, perhaps the surrogates which will be available will be big help to build up the confidence in the lending institutions.
How confident do you feel about being able to do that today?
I am quite confident actually, that's why I am saying all this. We are ensuring that now it should be end-to-end digital. Contactless lending platforms which have been created, they have been created with that in mind. So that right from filing an application till the disbursement of the loan, it's without any human intervention. We are creating models with the help of analytics, and those models are getting incorporated into the loan management systems. So this is something which will be a game changer in terms of enabling these account holders also to borrow and invest into economic activity, and I'm sure it will bring in a lot of prosperity right over to the last mile.
You said that this has the potential of being a game changer and that the initial results are positive. Can you share with us what the initial results indicate at this point in time?
As I mentioned about the contactless lending platform, making it possible for such borrowers to apply, and because see, Equifax and these kind of rating agencies have come into existence. They are also riding on this data. So if you really look at it, retail credit has become very popular in the last 10 years. Prior to that, retail credit was not as strong in the system. Why? Because there was no rating agencies who were not in a position to get the result scores. Ever since the result scores have been made available, banks are falling on each other to lend in the retail sector. So the issue which I am trying to highlight is that it is a credible availability of the credible information about the ability of a borrower that is something which enhances the confidence of the lending institution. So it is not merely bank, it will also be the MFI, it will also be the NBFCs. So the whole system will get benefited with the help of this ecosystem which is getting created. So I think, to my mind, this is something which is very positive. And so I feel that if at all we succeed in creating these credible information database, it is certainly going to improve the.
Absolutely, it will certainly improve the cause of financial inclusion. Sanjeev Bajaj, let me take that point forward with you. One, of course, is the access to information, access to data, which will give banks, NBFCs, MFIs the confidence to go out there and lend, because you have some clarity and some line of sight on the ability to repay. But I want to understand from you, in your own experience at this point in time, on being able to bridge this credit gap, what has worked, what hasn't worked, and more importantly, if you were to talk about the road ahead, what do you believe needs to be prioritized?
Shireen, you've got between two formal bankers and informal one. So let me actually swing the issue around and let's look at it from the point of the individual. What are the three areas that an individual needs support? One we've talked about is access. As far as access is concerned, we have a large working digital public infrastructure now for payments, for so many other financial products. How can we get the government, private sector and the public sector to work together towards at least a certain minimum set of services for much greater penetration? We get that access. Second is affordability. I mean, the access is great. If I can't pay for most things, what's the point? Here again, what protocols like UPI have done is completely changed the payment game. How can we again bring that more and more to a basic level of services at least? Eventually the rest, as private sector, even public sector, we have to make money. But how can we make sure that a certain set of minimum services are affordable? And the third, as an individual, I would say, is assent. I don't want to be in that financially included category at the lowest economic level of society for the rest of my life. So, as an economy, if you're going to grow at 7-8%, every few years, I'm going to be a little better off as well. How can the right savings pools be created so that at least my children are out of it?
No, you're absolutely right, and I think that links back to what Mr. Khara said as well in terms of the inflection point as well, the game-changing moment and opportunity that he spoke of. But again, I want to understand from you, in your own experience of being able to provide these services, in your experience of being able to get people to move up from where they are and aspire for more, what has worked? At the back end as well as the front end.
The enabling technology has worked. I think what we have seen across our regulators has been an openness to experiment with Fintech, to experiment with innovation, and that has allowed many of us to move ahead, get into smaller towns, villages, use the digital infrastructure where the economics work, physical infrastructure doesn't. But yet we're still very much caught up. For example, why should we in banking have physical branches if we can deliver the same product and service through a digital medium? We need to review some of our traditional structures, whether in banking, whether in insurance. We're seeing actually a lot more happening in insurance over there towards the development role. Same thing has to happen in banking as well. And of course, in a world which is today more and more rich in data, you are able to control if something goes out of hand. But we have to open up. And I think we are taking the right steps there, but a lot more needs to be done. We need a lot more competition in banking and financial services. The insurance regulator is talking about hundreds of companies in the insurance space. And look at the right amount of capital, look at the right amount of security over it. Otherwise, banking today is no hanging fruit. Why should we, as an NBFC, go beyond 200 cities? We can make enough money there. We go there because we feel this is our responsibility towards India. Open it up to many more. That's how you will see this happen.
So the banking aspiration from what you're telling me, that still is housed somewhere at this point in time in your mind?
So who knows? But you know what we managed to do without the bank gives us the best of both worlds. So the traditional banking license may not be the only way, and that's not what I'm necessarily referring to. I'm just saying, if you forget what the Banking Act, but if you want to take banking to the people, how do you do that?
No, and that's a good point, and let me get you to coming on that as well. And through Sanjeev's point that we need not necessarily look at banks from the traditional lens. And the RBI regulator has moved and opened takers, in some cases, in some categories. How effective do you believe that has been so far? And what more importantly do you anticipate the role of these different kinds of banks, so to speak, to play from payments to others?
I think it's too early to make a judgment call whether payments bank is a sustainable business or not, or small finance banks or not, because and you can see by RBI being cautious. I appreciate Mr. Bajaj's comments, but the experience of the regulator and of the banking system has been a little mixed, right? You see, last 25 years there have been 4 or 5 spectacularly great banks created, and there were 4 or 5 not so great stories as well. So I think you can understand why they have concern, and as with every policy, the good ones get affected more than the not so good ones. But to your broader point, and to the point of financial inclusion, I think our sense as HSBC's global research thinking also is that one of the greatest business opportunities around the world is financial inclusion, and within that, India is one of the greatest prospects. So I think one thing is it's a good thing to do. It's the nice to do part, but if we can convert that nice to do part into an extremely profitable business, because we do know that there are 25 crore, 50 crore Indians who even today, either for basic banking services, when they save money, they don't go to the bank, they go to something else, privately raise the money, or buy gold, or put it in their mattress or something, or certainly don't have access to what Mr. Khara mentioned, maybe minimum banking services, but how do you convert into health insurance, life insurance, and so on and so forth. So I think the trick here is, and I agree with Mr. Bajaj here, digitization has in India opened up the prospect that you do business with people who are so far new to credit, new to finance, new to insurance, new to everything, new to credit card, and not just do it because it's a socially nice thing to do or a priority sector kind of thing to do, but do it because you are taking that particular person away from a very high cost access to finance, if at all, and that too informal, into a much more sensible cost one. So the prospects for this are very bright. I think the digitization enables it, but we will still. I think it's since the session is compared to where I think it's still we're 5 to 10 years away from the point where
5 to 10 years away still.
Yeah, I think 5 to 10 years away where you could say, listen, the definition of financial inclusion, and we don't have a proper definition. If you see the task force that Mr. Khara chairs, one of the things is define financial inclusion. So I think even the definition that we have here towards, I think we are a decade away.
Mr. Khara, would you agree with that? And since you do chair that task force, take me through what you believe is the time period that we're looking at, and how would you actually like to define financial inclusion in the Indian context as well as the global context as we look ahead?
See, when it comes to financial inclusion, it is essentially what is required is opening of account, etc., enabling the transactions happening as one part of the story. The very important component is the financial literacy across. There should be adequate appreciation about what the finance is. And once that is something which is various initiatives have been taken by both the regulators, by Government of India and various state governments. Now it is now being talked about that why not introduce the basic concept of finance from the early stage in the school itself. So I think these are the kind of initiatives which will bring in enough appreciation for finance. So financial inclusion actually as a subject is beyond opening accounts, making credit available also.
Yes.
Is that understanding finance, and that is something which is of course what Mr. Nitendra has just mentioned. That might take about that long, but maybe as far as opening account, making services available, etc., to a large extent that job has been achieved. Now the next step is in terms of making people appreciate what the finance is.
I understand the importance of financial literacy, awareness, sensitization, etc. But to David Dave's point that we need to start seeing this as an opportunity and not as a mandatory requirement as part of the regulator saying that this is your priority sector target that you need to achieve and so on and so forth. And even if we look
in that context, these accounts got opened way back. All this started in 2014. So all these were zero balance accounts. Today, on average, each of the account has got about 4,000 rupees. So the collateral gain is that generalization of the financial savings. Suppose if these accounts would not have been opened, this 2 trillion worth of savings would not have got channelized into the productive purposes. So to that extent, yes, of course, and also now how the average balances will go will also be a function of per capita income.
Absolutely.
in the country.
That's right. It will be a function of how the economy and how strongly the economy grows. But I want to come back again because the consensus on this panel really is that to be able to take this forward, digitization is going to be the key driver. It is going to be the pillar on which the roadmap is going to lay. So Sanjeev Bajaj, partnering, collaboration with fintechs, with banks, what has the current experience been, and more so, what you believe that will lead to as we look ahead?
First, let me just start by answering something that Hidendra was talking about. The regulator needs to be careful. Of course, we're not talking about the Wild West over here, but let's also keep in mind.
Oftentimes it can be.
It can be, but the point I want to make more seriously is the fear of failure can never create innovation. It will only create mediocrity. So you need enough guardrails, but you have to keep pushing for innovation. And over here, we're not being critical. We're talking about how can we do more, and that's where we're sharing ideas. I believe what we are seeing as a collaboration between those that have last mile connectivity, the fintechs, the innovation, the customer access that they have, with the traditional financial services industry, banks, NBFCs, mutual funds, insurance. This is reaching a very good balance because we are each using skills that we have built internally and finding ways to collaborate. Because everybody cannot do everything. So you may, as Dinesh said earlier, from an era of just competing, we are in an era where we compete in many areas, but we also collaborate in many other areas. And I think that is working out very well. Now, as you end up pushing some of these boundaries of innovation, and the fintech industry, the insurance industry has done that, of course there will be some failures, there will be some mistakes. That's where the regulator, we need to have confidence actually that we can go and push hard because the regulator is there to balance things out if we make a mistake. But I think this collaboration is great. Digital payments to me is the game changer because at every level for each type of consumer, the minute you can see their cash flows, inflows and outflows, and we should get more and more digital payments. You can start designing the right type of products. You understand the right amount of risk that you can take, and you can make sure that you deliver it at affordable costs.
On your point about innovation and regulation, and I don't think that this is an India-specific debate, it's a global debate on whether innovation keeps pace with regulation or regulation keeps pace with innovation. Where do you find yourself constrained today? The things that you would like to do but cannot because of regulation.
So again, we are not getting into that level of detail over here, but when you look at multiple regulations of accessing, whether geographically, different product design, depending on which regulator, and those go into micromanagement. I think at a higher level, there are enabling provisions that get created, but then there are hundreds, if not thousands of people who have a job to do in those regulatory departments who keep putting all kinds of little controls in place. We need to open some of those up. I'm of course exaggerating it to make a point, but we need to open up, we need to trust the system more. If somebody makes a mistake, we have to acknowledge that, charge a fine, move on. If somebody creates fraud, malified intention, take very strict action. But don't assume everybody's a fraud.
Yeah, on the innovation aspect and what we are seeing today, and I think this is a conversation happening here in India and globally as well, the role and relevance of the CBDC, for instance. Can it play a role in financial inclusion? Can it play a role in direct benefit transfers? How do you see that evolving? I mean, we are of course in very nascent stages, but do you believe that that's also going to be a 5-10 year sort of window for evolution?
The first point I think really call out in India is that amazingly it's not come more from the private sector. The public policy institutions have created a very good enabling framework. They open their databases, expose their APIs, and allow private sector to freely experiment with that, which has created this digital public infrastructure is created by the public, but its use cases are all private sector. So I think that's a great model that you enable innovation through public policy frameworks, but then don't come in the way of the mom and pop stores or the startups or a big bank or a big NBFC or whatever. I think that's one part. I think when it comes to payments, I think all of us have said it many times. In all probability, India's payment infrastructure for retail as well as for wholesale and large businesses is possibly a decade, we use the word decade again, decade ahead of most countries that we travel around, especially the West also. So try to make one more way of receiving or paying money, which is this RBI CBDC experience. I think given how efficient mobile payments are and the multiple tools of making those payments, whether it's UPI, whether it's QR code, whether it's WhatsApp Pay or whatever, I think it will take some extra education to tell the users that CBDC is better than making it is. You have to have a reason, right? Because the time frame can't be faster than whatever it is, 1 second or 2 seconds or something. I think that the reason appears to be anonymity, that it is like giving somebody a currency note. If I give a currency note, nobody knows, but if I make a UPI payment, everybody knows whose account has got debited and whose account has got credited in CBDC. How they will create an enabling legal framework where nobody has access to that information. CBDC is being positioned as a currency note, but without the risk of theft, without the risk of currency note getting stolen or torn or whatever it be. So I think as far as payments are concerned, I think we are reasonably good, and of course we will keep improving from here also, maybe there will be something else. But CBDC's main use case appears to be eventually cross-border payments. Okay? And as a bank which is very big in cross-border payments, we are looking at it very closely to see. I think the Reserve Bank of India Deputy Governor actually mentioned this last week when he met some of us and recorded video that there are 7-8 global banks which have a very large market share of the cross-border payments. Obviously, we are one of them, and how therefore these banks react to CBDCs. We are also taking a view on how to handle this, because it's, on the one hand we know it's good, but on the other hand we have to see what it does to us as well.
Yeah, I would imagine that you're tracking that debate very, very closely. So, Kara, in terms of use cases as far as the CBDC is concerned, do you believe that it could be relevant to play a role as far as financial inclusion is concerned?
Yeah, we have already with the digital viewers launched, which is CBDC, as far as wholesale is concerned. We have seen it has got a very, very varied and relevant role to play in terms of settlement of the secretaries. And when it comes to, we feel that even the scope can be further enlarged by bringing in institutions like the mutual funds, insurance companies also, when they participate into these kind of GSET or maybe for that matter state development programs also for settlement of those kind of things. So there is a very varied case, and it can certainly take away part of the physical currency circulation, and also will probably bring in the efficiency of settlement also. When it comes to retail, of course, recent pilot which are there, a good network was created across the country, and there we see decent traction also. So considering the fact that the cost of currency management comes down quite a lot, and also when it comes to formalization of the economy, this actually goes a very long way. So for a country of our size, expecting that currency replace physical currency, no. I think there is a scope and a case for coexistence of both. But yes, of course, to my mind, the velocity will certainly go up, and also it will probably support the increased GDP of the country. This is how I look at it. There is a scope for both retail and
to coexist, and that's what it's likely to be. We cannot talk about financial inclusion without talking about inclusion of women. And as far as bank accounts are concerned, I know that we've been of course focusing on this through our effort Future Female Forward as well. But as far as bank accounts are concerned, there is parity here in India. But what more do you believe can be done to really get women to be force multipliers from an economic point of view, and the role that could eventually play in financial inclusion?
I think there are lots of studies, lots of anecdotal examples that a lot of men, including in the urban areas, assume that the Aadhaar card and the mobile phone of their mothers, sisters and spouses is basically their phone. So they just do something on some loan application, and then they say, OTP kya hai, batao jara. And she doesn't even know that she's the borrower, right?
Yeah.
So clearly there's a lot needs to be done. I mean, obviously financial literacy, Chairman SBI mentioned, I think even in this report, I think there is a very, very relevant suggestion that gamify financial literacy, right? Because since everybody seems to be paying
without a 28% tax.
Okay. But yeah, so I think it's very clear. Inclusion without focusing on gender inclusion makes no sense, especially in poor countries, where there's a significant denial of financial services, either because they can't access or they don't know that they are accessing, somebody else is accessing on their part. I think data would seem to suggest that loans and monies transferred to women tends to be much more productively used than given to. So I think the scope there is very, very large. At this juncture, whether we have enough systems and analytics and Mr. Kara mentioned, do we have enough credit history? Is the credit history actually of the person, or is it impacted because of somebody else's abuse, misuse, whatever the right word is? So I think lots of work to be done, but I think all kind of research seems to suggest when you give women more economic empowerment via the inclusion channel, the potential effect on economic growth is very, very large in many percentage points. So that I think it will be more than a 5 or 10 year story, but the journey. But the reality is it's well underway right now. I think you see a lot more awareness, which is a good starting point. But I think if we can, through these discussions, create financial literacy and financial awareness amongst all, but especially women, I think we will lay the foundation for a much more sustainable and strong.
Yeah, absolutely. This is probably the best that we've seen as far as balance sheets are concerned for both banks as well as for NBFCs. We're talking about the opportunity that lies ahead if we are assuming a 7 to 8% growth. At this point in time, Mr. Kara talks about the doubling of per capita, which is the expectation and the aspiration. The ability to take risks at this point in time, how confident does the financial services sector feel to do that?
The ability to take risks is really driven by an understanding of risk. The greater the understanding of risk, the lower is risk and greater than the ability to do business. And increasingly, we've talked about this now in a digital country, our ability to understand information and hence ability to assess an individual's risk or a business's risk is far greater, is improving every year. Of course, this still stays in pockets. So we today gave out 30 million loans last year. Large part of that information is ours, and it's also as a competitive advantage. But is there a certain basic level of that information that should be shared on the repository so that the wider banking system or the insurance system can benefit from that, while we keep the most sophisticated information to ourselves? So we are seeing significant amount of solutions, innovations in this space happening, which is enabling greater penetration by improving our understanding of risk. How do we spread that at least to the financially inclusive segments of society?
Speaking about this collaboration and openness as well, Sanjeev talked about the fact that, can there be ways of sharing the data that you have access to in order for you to be able to grow the pie larger? Many innovations or many changes have been brought in from a regulatory perspective, things like account aggregators and so on and so forth. Mr. Kara, how do you see all of this changing the landscape over the next few years?
Just make one point, the account aggregator, this is a very significant positive step towards this.
Yeah.
Well, when these kind of things are now already on the scene, one thing we have to be very mindful when it comes to account aggregator. We have to be aware of the fact that there is a law relating to privacy, and then who is supposed to manage those mandates, then who is responsible for the privacy. Again, these are some of the grey areas which I believe are still engaging the attention of various stakeholders. But having said that, in the financial sector, it is always good to have the collaboration with various players and also the ecosystem. And particularly what I mentioned earlier also, because of the thanks to bureaus, we have got a clear visibility of the behavior of the customer, which enhances our confidence in the customer. So I think similarly for the corporates now, the currency which is available, it has given enough visibility in terms of what is happening across the accounts. So I think this is something which has really, these are the building blocks which you have seen in the recent past. Going forward, if we look at some of the developed economies, we have also seen that if at all there is a market available for offloading the assets, which is essentially secondary loan market, and also market for double B and jump. So which means that if at all there is a depth in the market, it has got an ability to absorb various risks, and once it has got an ability to absorb those risks, that enhances the ability of the lending institution to assume risk also. What Mr. Bajaj rightly mentioned, that very important component is understanding the risk. If at all you understand the risk, and if at all you have got enough mitigant in the system, I think this is a very positive step for the development of the financial sector.
Since we are talking about risk, everybody at this point in time is gung-ho about the growth story. But what would you identify as the key risks to the growth story that is being held out today?
It's a question we get asked regularly, and it's a question all of us take a deep breath to answer, which means
You can take one now before you do.
No, I think it's you spoke about the financial sector balance sheet, you spoke about the balance sheet, corporate balance sheet, even household balance sheets, at least as a reflected in retail track record, etc. So to the extent that all four pillars of the economy appear to have good balance sheet, you would think that the basic runway should be smooth and not. But apart from the known ones like oil, things of that nature, I think the fact is that there is so much digitization, it is so great, but it is bringing in risks, some of which we know and some of which we don't know. Like we spoke about when will the financial sector become more risk averse or more prone. I think, for example, if you knew, what Krilik has managed to do or what Simple has managed to do is give us that much more confidence. But if you also had records which were easily available of anybody who tried to impersonate somebody else, tried to use some mobile number which was not authenticated, or an Aadhaar number, or a PAN number, and if you had a central repository which you could run faster. Can you imagine? Because for every 20 qualified dollars, there is one or two who are not qualified, right? That I think most lenders have. Similarly, in the corporate space as well, I'm not saying they're not qualified, but their intentions sometimes have not been the best. So if you could get that repository out there, I think then you will find risk appetite go up dramatically, because what you're worried about is complete, a loan taken really as equity. Many people think banks' loan is their equity. So I think how to identify those people. But overall for India right now, I think I mentioned earlier, if all of us aren't optimistic now, then there is something clearly wrong with all of us. I can't identify too many structural risks. There is key, the ones which we sort of all are aware in terms of political stability. But otherwise, I feel really good, and I think the financial sector is actually way more open to risk than the corporate world. I mean, everyone asks the financial sector, why are you not lending? But I can't lend if there is no borrower. You can't just throw money.
No, that's a fact. But Mr. Kara, on that, I want to understand from you, private capex, of course, you've been talking about the fact that it has picked up, and it's picked up significantly in the last few months. What's the indication that you get on that front today?
See, when it comes to the private capex, it has got various stages. So, right from discussion on the right road to applying for the loan and then availing the loan. So, there's always a lag in these three stages. And when I say that the people have started talking about private capex, that is at a time road stage, that is when they start seeing the demand on the ground. So I think it starts with the retail demand, when we start seeing the robust demand, and also the capacity utilization inching towards 85% plus. That's normally the stage where we have seen that the private corporates start looking at evaluating various investment decisions. So we have seen that kind of a change which is already there, because thanks to the robust private demand, now there is very clearly they are talking about it. People have started applying for the loans and also raising funds through the debt capital market, equity capital market also. So I think it's a phase. So we are seeing the right traction in the right direction.
Okay, right direction is what we're seeing at this point in time. Sanjeev, one outlook as far as demand is concerned at this point in time, does it continue to look as strong as it did? And more importantly, the recommendations that you all put together as part of this B20 report, the key recommendations that you believe we need to focus on, both in terms of capability building, capacity building, and regulatory building?
Firstly, on the ground, we're seeing a reasonable amount of growth, but we do see lean seasons and better seasons because we are still in a period of global uncertainty. And that's why I think as a country, we have to focus now our investments rather than towards global growth, towards global market share. We have to take a part of an existing pie because the growth of the pie is still the geopolitics uncertain. Coming to our own recommendations, as you know, these are 11 important themes. Each one is critical. I think what's important is that for India to see as we finish our G20 term, how do we work with the next G20 country, the presidency, that's with Brazil, to see that some of these key recommendations survive and go into the future so that they are then meaningfully implemented going forward.
On which of those aspects do you feel most confident that there will be consensus and there will be a sort of a greater understanding and an appreciation of wanting to take this forward?
I believe in the areas of innovation, and I hope in the areas of public digital infrastructure, seeing the kind of advances India has made and keeping in mind that the next countries also from the developing world, from the global south, we see some strides.
I think on global collaboration, we just saw the finance ministers and central bankers meeting conclude in Gandhinagar as part of the G20. And one of the big areas, for instance, on cryptocurrency, the Financial Stability Board has presented a framework, but there hasn't been consensus on whether that will be taken forward. Forging global consensus on some of these crucial issues that involve the financial sector, how confident do you feel about that?
I think on topics like this is going to be a very much more nuanced and complex issue. I think the Central Bank of India, Reserve Bank of India, and the government of India clearly have taken a view that any crypto which is not backed by the central bank is nothing. It's a flower. It's a nothing, right? So, and they keep asking what's the asset backing it. In the West, however, the debate is very mixed. There are very strong proponents and followers that this is all legacy thinking. The central banks are 100 years behind the curve. And on the other hand, you do have some conservative people and organizations there who also think similar to the Reserve Bank of India. But we do know that in certain markets, the private sector has a much more greater voice in final policy outcomes and decision making. So I think in areas like this, the good thing is, and you have to give credit to the Reserve Bank of India, is they have raised the debate. Okay, they are the only central bank which is consistently saying it's fine, I could be wrong, but let's debate a lot more rather than just embrace something because fintechs think it's a great name or users think it's a great name, etc. Because potentially this has financial stability issues, right? We did experience it about a year back when the exchange goes down and then you had a lot of people lose money. Now, most of the people who lost money were relatively well-off people, so it really didn't matter that much. But if it's a mom and pop store or everybody going there, then it's a... So I think there'll be areas like financial inclusion, which is what we are here for. I don't think there'll be any debate there. I mean, to add to the point that Mr. Bajaj made, I think one of the recommendations which is to create a secretariat, which is permanent therefore, it's not one country's presidency which takes a particular subject and then the next country chooses its own financial inclusion was chosen by India. So I think if that becomes, then this becomes a permanent subject across G20. It's how the recommendation is to house it within the multilateral institutions and have a lot of private participation in that. So there'll be the easy areas like financial inclusion, climate change, and things and so forth. There'll be the complex ones like crypto. But as with all, any issue involving 20 different countries, I think you can get 7 or 8 out of 10 things agreed. That's a very, very good outcome.
Absolutely.
I think interest rate is something which causes everybody's attention because it is something which affects anybody in the near term. But having said that, when it comes to MPC, they have multiple data points to look into. But another broad data point is, of course, the inflation trajectory. What we have seen in the recent past last month, it could be perceived as an aberration. But to answer your question, whether we expect any kind of interest rate cut, as a bank, we don't expect any interest rate cut. Maybe the status quo is something.
I've been hearing the total panel discussions and finding this financial inclusion index is highly skewed towards banking product, like credit worthiness of the individual. But with this Pradhan Mantri Suraksha Yojana, there is no inclusion in that financial index. Now, Pradhan Mantri Suraksha Yojana is available at 12 rupees a year and 330 rupees a year, which any individual can afford. So whenever we talk about financial inclusion, we talk of 56 crore whatever the name is used, account. But we never talk about that how many of these had these Suraksha Social Security, which just cost peanuts. I think the financial inclusion, there is high time the index has to be changed.
Okay.
That you mentioned the base accounts are of course the general accounts which are there, and invariably in these accounts, these products which are essentially related to Suraksha Bima and Jeevan Bima Yojana, these are the products, and also APY. These are the three products which are being sold, made available to the customers who are maintaining these accounts. But again, as I mentioned, insurance is something where there should be adequate appreciation at the other end also, because otherwise it is perceived to be a mis-selling. So, which is again a function of the financial literacy. So I think it's, as I mentioned, that it's a journey. Now we have seen decent penetration into these accounts for the Jeevan Bima Yojana and also for the Suraksha Bima Yojana. But yes, of course, it's a constant effort and endeavor. What you mentioned in terms of it should be captured in the index, that's a point which is, as of now, perhaps is not there. But yes, certainly that is.
Or anything. And any domestic help of mine, they're just not aware of these accounts. They have Jan Dhan account, but they are not aware of this Suraksha Social Security. None of them.
Right.
So I said the Jan Dhan account opening has been given, target has been given to the bank for Jan Dhan accounting. Such target should be given for these schemes also.
It is already been given and it is being followed up also by the departments concerned. So it has been done.
Thank you.
I am president of an NGO called Hand in Hand India. We are in the process of creating jobs and financial inclusion. Created 7.7 million jobs till now, and 3.5 million people have been financially included. So we work across 17 states. A large number of our clients are women. Two things I wanted to say. Since morning we've been hearing a lot about financial literacy and inclusion of women. I just have a comment that we work, of course, in the area of financial inclusion, but for financial literacy, the role of CSOs, the civil society organizations, or the common service centers which are there in rural areas is very crucial. We talk about last mile connectivity, but and I know RBI is working and the banks are working to collaborate, and we heard the word partnership a lot. But unless and until we take this process very seriously of involving CSOs in ensuring last mile connectivity, ensuring gender inclusion, this is going to be a very distant dream. As Mr. Dave said, you have 49 crore people who are banking, but you also have about 50 crore who are left out of this fold. Yeah. So this is my comment that I want to make.
We're out of time, but thank you very much for joining us here this morning. Thank you very much, Mr. Khara, Sanjeev, and Mr. Dave for being with us and for sharing your insights on where things currently stand, and more importantly, what the road ahead looks like. I think there is consensus that there has been a fair degree of progress, but the journey is long, it is arduous, and a lot more needs to be done. And it will be done on the back of digitization, on the back of collaboration, and on the back of innovation. Appreciate your time. Thank you very much for joining us. Thank you very much, ladies and gentlemen.